been done, and they have now come out with the second version of the model GST. So that is now called revised model GST law. And this revised model GST law, although what we find is it has been prepared by the Secretariat of the GST Council, and now it is going to be discussed by the GST Council on 2nd and 3rd, that is today and tomorrow. GST Council is going on there, they are discussing probably on this revised of the model GST law. So this revised model GST law, as I said, where I started from, this revised model GST law actually number of definitions, number of concepts have changed from the model GST law. So that is why I said that my job is a little simpler, that when I talk about getting ready for GST, I don't have to bother about exactly value में क्या change हुआ या time of supply में कहाँ क्या change हुआ, वो तो शुभम का tension था या किसी और का था, वो they have been taking care of. मेरे को तो केवल macro level पे बात करनी है कि getting ready for GST, तो getting how to get ready for GST, what are the issues on that. So when we start with getting ready for GST, friends, the first point is, since we all know that the object of taxation for GST is going to be different from the object of taxation from in central excise, or that in VAT, or that in service tax. Am I clear? What is the object of taxation in central excise? Manufacture of goods. What is the object of taxation in VAT? Sale of goods. What is the object of taxation in services? Service tax? Services, provision of services. What is the object of taxation in VAT, GST? Supply. So now it is supply, which is different from manufacture, which is different from sale, which is different from service. And supply of goods or services. Whether goods or services again does not make any difference. So earlier it was manufacture of goods, earlier it was sale of goods, earlier it was provision of services, but now it is supply of goods or services, both. That means irrespective of whether it is goods or it is services. So first point is that the concept or object from manufacture or sale or service to changing to supply. Second point is there is no discrimination, as it, unlike at present when we have discrimination between goods and services, now we will not have any discrimination. So when these two concepts itself are changing, so from there starts how to get ready for GST. We have to get ready with this concept first. So the first point is to understand, to analyze and understand what is the concept of the new object of taxation, that is supply. What is supply? That we have to understand in a analytical manner. I just refer to, although you have already discussed. So the charging section itself says that there shall be levied a tax. I am just reading the highlighted portion. There shall be levied a tax on all intrastate supplies of goods or services on the value at the, as specified in section 15, etc. So there shall be levied a tax on all intrastate supplies. So there shall be levied, tax shall be levied on all supplies. So tax shall be levied on what? On supplies. So the charging section says that levy itself is on supply. So it has to be a supply. Until and unless there is a supply, there is no question of tax. What is supply? The supply is defined here. Section 3, meaning and scope of supply. Supply includes. So first point here is supply includes. That means the definition says that supply includes. That means it's an inclusive definition. So supply includes, if you find A, B, C, this is the complete definition. Now A, B, C, that means what? A, B and C are included in supply. But what is supply then? That means supply is something bigger than this A, B and C. So the scope of supply is wider than A, B and C. It could be wider than A, B and C. A, B and C are included in it. That means there could be something more than that also. So that we have to keep in mind first of all, because anything may come. In due course we will come across various situations where we will find that maybe not covered in A, maybe not covered in B, maybe not covered in C. But still it may be treated as a supply and accordingly tax liability may be there. So what I am saying is, when we are talking about getting ready for GST, we have to analyze and understand the nature and scope of activities in any business or in any enterprise for that matter. We as consultants, we as auditors, we as tax professionals, we have to look at it from that viewpoint, that what is the scope of supply, what are the activities the client is carrying out, and whether he is covered anywhere under this definition. So the first point. Second is, when it says supply includes all forms of supply for a consideration in the course of furtherance of business. So when it talks about supply for a consideration, and that has to be in the course of furtherance of business. So even if there is a supply for a consideration, but if it is not in the course of furtherance of business, that means that may not be included. I'm not saying that will not be included, that may not be included, that we have to see case to case basis. But so second. Third is, it says importation of service. Here a very good improvement has been done over the earlier draft, over the first draft. That is, now it says importation of service for a consideration. Earlier it was not there. Earlier it was importation of service whether or not for a consideration. So if it was whether or not for a consideration, that scope would have been much wider. Many activities, not only activities, many things. Even if you are talking, you are speaking for that matter to any of your friend or relative somewhere outside India, that means that is a supply of service and maybe chargeable to tax for that matter. So those were scope, but now that has got good sense prevailed, and they have at least considered this submission from the stakeholders that okay, it should be only for a consideration, because so far there was no concept of service without a consideration being charged to tax. So they have considered that. And last it says a supply specified in Schedule 1 made or agreed to be made without a consideration. Schedule 1 are the items which even if made without a consideration still covered under supply. So that is what I am referring to, that it's not necessary that any transaction which is for a consideration, that only is covered. Something which is without consideration is also covered under supply, and that also may require provision of tax, that may require to capture, the data may be required to be captured, it may be required to be identified, it may be required to be measured, and that is valued, and you might have to determine the tax payable on that. So how do you measure that, how do you identify that first of all? That we have to see, that see what are the various activities undertaken by any entity, which, see what happens is we are accountants, we are finance professionals. So we look at the balance sheet, that is books of account of any company, of our clients. So when we look at the books of account, what is recorded in a books of account? What is recorded in a books of account?
Financial transaction.
Financial transaction, that means only when there is a financial transaction, that means any supply is made for a consideration, that is only recorded. If something without a consideration, it is not recorded in the financial transaction, but it may have tax implication. So I cannot anymore restrict myself to the books of account. That is my point. We have to make a special analysis of the activities of the company to see that whether there is something more than what is recorded in the financial transaction. That we need to analyze and identify and find out, and maybe for that matter make out a list and all that. Okay, these are the activities you are doing. Like say for example, one company may have different, the simplest example is one company may have suppose their factory in Calcutta or nearby, and they have their depot in Ranchi. So they may be supplying goods from Calcutta factory to Ranchi depot. So when they are supplying goods, interstate stock transfer, presently against Form F, as per the present procedure. So Form F is a requirement, procedural requirement, but actually what he is doing is he is simply transferring his goods from his factory to his depot. So there is no financial transaction. Is it recorded in the books of account? It is not recorded. But, and accordingly presently VAT is not payable. Of course, in VAT, reversal of ITC is there. To that extent it is there. But in GST now, when he will transfer, that has to be liable to tax, because supply is now taxable and supply includes the stock transfer. Since supply includes stock transfer, so I have to identify whether they have any kind of system of stock transfer or not. If there is a stock transfer concept being followed by that company, then I have to find out how do you make stock transfer. So since that data needs to be captured in the system to be accounted for, so I have to build up an internal control and security mechanism to ensure that all stock transfers are recorded. Now how do you record? Either you raise a bill, but when you raise a bill, the bills raised to your customer, it cannot be same with that. So you have to have a separate series of invoice or something, maybe inter-unit stock transfer bill or something, whatever you may call it. The nomenclature is not very material, but what is material is you have to develop a concept, develop a system that any stock transfer now cannot be affected without such bill being made. And when that bill will be made, the system also should now take care of that these types of bills are also required to be accounted for. And when you account for those bills, then you have to attribute a value also to this. So when you talk about think of attributing a value, then how do you value? So what are the issues in valuation? We'll come to that as well. So depending upon whatever is the valuation issues, but you have to develop a valuation mechanism and you put a value to that, and on that you calculate tax, which will be again what tax will be payable in GST, which tax will be payable? IGST. Because when it is interstate stock transfer, then only it is covered under supply. Within the state, stock transfer may not be supply if it is the same vertical. If you have different business verticals having separate registration, then it may be treated as supply. But otherwise, interstate stock transfer is going to be treated as a supply, and in respect of interstate, IGST will be payable. So you have to make a provision for IGST accordingly. So that step by step, I have to follow those steps basically, those practices, and I have to find out which are the transactions, or rather which are the activities which are not presently accounted for into the system, but now in GST that will be required to be accounted for. Similarly, I will give you another example. Suppose you are a partner in a firm, maybe having 5 partners, chartered accountants firm I am talking, and you have one head office in Kolkata and one branch office, let's say in Delhi, or another branch office maybe in Patna. And in Patna, you get an assignment of suppose GST implementation, or let's say when we come to GST regime, after that we talk about. So in Patna, you get your office gets an assignment of 5 lakh rupees of audit in 17 August, September, etc. Onwards. And that assignment is being handled by your Patna branch. It will be billed from your Patna branch. But you are sitting here in Calcutta and you are giving advice or support or guidance to your Patna branch. You are the senior partner. So your partner in Patna is taking all sort of advice and support from you from Calcutta. Is that a supply? Now mind you, the concept of supply is much wider. We have to understand this concept. Supply means all forms of supply for a consideration A. B, importation of service. C is schedule 1 without a consideration. When you go to schedule 1, you will find that I'll come to schedule 1. So when you go to schedule 1, you will find, like as I said, stock transfer. This is also there covered in schedule 1. So stock transfer, that means transfer of goods, that is supply of goods or supply of services, both. Present in GST, there will be no discrimination between goods and services. So all the concepts, whichever is applicable in respect of goods is also applicable in respect of services. So when you are supplying your service to your Patna branch, that is also a supply. And when that is a supply, you have to attribute a value to that, you have to capture that, you have to identify that, you have to measure the value, and you have to pay IGST on that. Suppose, for example, the value of your support to Patna branch is, let's say, 2 lakh rupees. So that means you have to raise a bill for 2 lakh rupees on your Patna branch, and you have to pay IGST on that. You collect IGST and pay here, and your Patna branch will raise a bill of 5 lakh rupees to the client. They will collect CGST plus SGST, and they will get credit of IGST paid to you, and they will set off. So ultimately your net outflow on account of tax will be 5 lakhs, whatever is the applicable rate. Suppose if it is 18%, that means 90,000. But first you have to pay here IGST, and then you have to take credit there. So these are the various types of transactions, various types of activities which are presently not involving financial transactions, therefore not recorded, but now in GST that may be required to be accounted for. So that is what I am trying to make, that you have to identify, understand and analyze what is the scope of supply and how it is going to affect each and every entity. For any entity for that matter, if I have 10 separate clients, I have to do this exercise for all those clients separately, independently and individually. Now if I go to schedule 1, see what is schedule 1? Schedule 1, matters to be treated as supply even if made without a consideration. Number 1, permanent transfer or disposal of business assets where input tax credit has been availed on such assets. So permanent transfer or disposal of business. You have taken input tax credit in respect of an asset, maybe your stock or inventory or whatever it may be, your fixed asset, whatever. And then subsequently, if that is transferred or disposed of permanently, then you have to reverse the credit proportionately based on whatever the principles they will prescribe. But you have to reverse. Supply of goods or services between related persons or between distinct persons as specified in section 10 when made in the course of furtherance of business. What is that in section 10? Distinct persons. Distinct persons as specified in section 10. Here it says that a person having businesses in or making supplies from 2 different states or more than 1 states, they will be treated as 2 separate or distinct persons. So suppose one company, like say by that same firm, say for my firm is KNR and Company. So KNR and Company having office in Kolkata as well as having office in Delhi. So I am making supplies from Kolkata as well as from Delhi. So Kolkata is one company, distinct person, and Delhi is another distinct person. So KNJ and Company Kolkata and KNJ and Company Delhi are two distinct persons. And when these are two distinct persons, then supply between them is also covered under the definition of supply. And therefore that has to be taxable. Please.
PAN is same for both of us.
Sorry?
PAN is
Yes. PAN has to be same. If PAN is different, that means entity is different. Then there is no issue. Nothing to be talked about. When the PAN is same, that means the same entity having two separate offices, that is the issue which we have to talk. Right? So supply of goods or services between related persons or between distinct persons as specified in section 10 when made in the course of furtherance of business. Number 3, it says supply of goods by a principal to his agent, where the agent undertakes to supply such goods on behalf of the principal. So that means you are having, suppose, consignment agent, and the consignment, you are sending goods to your consignment agent and the consignment agent is supplying on behalf of you. So that similar here, that when you are supplying to the agent, it's not a sale. So again, no financial transaction, so not recorded in your books of account. Only the location of stock is changed. So presently you are sending it against firm F, but now it will be treated as supply, and accordingly you have to pay tax here, and then when your agent will effect the supply, he will again collect tax. Whatever, he will get an input tax credit, that's a different issue, but he has to comply. So that means...
So now the consignee aspect has gone. Everyone, the consignor has to raise the bill, again the consignee has to raise the bill.
Correct.
That is the point.
Absolutely right. Now, number 4, importation of services by a taxable person from a related person or from any of his other establishments outside India in the course of furtherance of business. So, importation of service by a taxable person from a related person, or second part is important, from any of his other establishments outside India. So, maybe one company having office in Calcutta as well as another office maybe in, say, Singapore or Dubai. So when any service imported from Dubai, that means suppose I have a branch office or representative office in Dubai and I am supplying certain goods. So my Dubai office is procuring orders from Dubai or Middle East, any other country. And he is forwarding those orders to me here in India, and against his services, that procurement of orders, I am supplying goods. So the orders procurement by my Dubai office for me will also be treated as a supply. So there, since it is supply, again, supply in the course of import will be treated as supply in the course of interstate trade or commerce, and accordingly IGST will be payable. So I might have to pay IGST on that, depending upon other provisions, but I am just right now speaking to or talking about the particular concept of supply, how this is going to affect our preparation, how this is going to guide our preparation. So importation of service from any of his other establishments outside India in the course of furtherance, but here it is in the course of furtherance of business. It has to be in the course of furtherance of business. If some activity is not related to business, then that's a different issue. Like earlier we were talking about that, अरे मेरा ऑफिस हम रेगुलर बात भी कर रहे हैं आज क्या बिजनेस हुआ क्या नहीं हुआ या कुछ रिपोर्टिंग है अकाउंटिंग है, so those will also be covered according to the earlier provision, but now that has been taken care of. So it has to be in the course of furtherance of business. If any supply of service is there, it will be taxable. So this was schedule 1. So supply, the new object of taxation, that we have to understand. So we have to basically come out of this mindset, this old notion, this existing notion that अरे मैन्युफैक्चरिंग तो है नहीं तो टैक्स क्यों लगेगा, या सेल तो है नहीं तो टैक्स क्यों लगेगा. अभी तक हम लोग हमारी जो थॉट्स है, our thoughts are now restricted or limited to sale. We are not going beyond that. So that we have to now break that barrier. So transfer of goods or services inter-unit are also covered. Transactions without consideration are also covered. Second point is time of supply. So time of supply of goods or services, a new concept of time of supply. Presently what happens? In case of goods, when I sell goods, कब tax देते हैं? When do I pay tax?
Raise the invoice or deliver the...
As soon as normally you raise the invoice, you pay the tax, irrespective of when you receive the payment. Even if the payment is received in advance, no tax paid. Even if the payment is received subsequently, no tax. I have to pay at the time of invoice. The only thing is, when there is a dispute, when you refer to that exactly what is the point of taxation in respect of sale of goods, it is actually when the sale is effected. So that means when the property is transferred. So that means when property may be transferred by you are simply handing over the possession. So when the property is transferred, that is the point when tax is payable. Now the concept is changing. You might have already discussed time of supply. So in the although when did you discuss time of supply? First दिन मतलब कितना था?
Friday.
Old law.
Old law, sir.
That means old law. Now that law has also changed. Actually अब ये ARC को एक दूसरा complimentary class देना पड़ेगा.
He has already scheduled one 5-day seminar in first week of
बट वो तो सेपरेटली चार्जेबल होगा सर. अभी तो इसका एक एडिशनल सप्लीमेंट्री देना पड़ेगा.
नहीं, फिर आप मार्च में नहीं बोलेंगे तो कि जो लॉ पास हुआ उसके बेसिस पे भी इसका सप्लीमेंट्री दो.
अरे बासी खाना खिला दिया.
नहीं, उस समय के लिए फ्रेश था.
हाँ,
फ्रेश था, जब खिलाया उस समय फ्रेश था.
1:30 बजे एमेंड हो गया. वी आर लिस्टिंग एट 5.
नहीं सर, ये सैटरडे को हुआ है.
ना एक एमेंड हो गया था 1:30 बजे. दे एग्रीड दैट
आप एकदम फ्रेश डिलीवरी
उसने खास हमारे स्पीकर्स नहीं में 1:30 बजे वहाँ चेंज हो जाएगा और यहाँ 5 बजे जो देंगे आपको.
नहीं बट स्टिल आई एम श्योर कि ARC के अभी 3 ऑफिस बेयरर्स यहाँ मौजूद है. वो लोग एक सप्लीमेंट्री क्लास देंगे सर, वो फॉर द एडिशनल पार्ट. जैसे पहले होता था ना, बुक आप खरीदते थे. अभी तो क्या होता है आजकल ऑलमोस्ट एवरी ईयर आपको नया एडिशन खरीदना पड़ता है. पहले क्या होता था कि एक बार बुक खरीद ली तो फिर दूसरा तीसरा बार वो सप्लीमेंट्री मिल जाता था फ्री ऑफ कॉस्ट, या एक एडिशनल चार्ज 10 रुपया ले लिया. तो
अभी आप अपने किताब के लिए क्या करते हैं?
नहीं, अभी मेरी नई किताब आएगी तब सोचिए. तो एनीवे, तो टाइम ऑफ सप्लाई हैज नाउ चेंज्ड, बट चेंज्ड अंडर द चेंज कॉन्सेप्ट. व्हाट इज द कॉन्सेप्ट? अभी गुड्स और सर्विसेज के लिए ऑलमोस्ट अलाइक. व्हाट इज दैट? सिंपली इट सेज दैट if payment is received in advance, yeah, basically when the invoice is raised or when the payment is received in whichever is earlier. यानी कि अगर आपने एडवांस रिसीव कर लिया तो जैसे सर्विस टैक्स में ऑलरेडी ये कॉन्सेप्ट है पॉइंट ऑफ टैक्सेशन रूल्स में, लेकिन वैट में ये नहीं है. अब जीएसटी में ये नया कॉन्सेप्ट आ रहा है. तो ये भी हमको ध्यान में रखना पड़ेगा कि अब एडवांस रिसीव करते हैं तो हमको टैक्स देना है. तो फिर एडवांस रिसीव करते समय हाउ डू आई अकाउंट फॉर इट? मेरा इंटरनल कंट्रोल सिस्टम मेरे को डेवलप करना पड़ेगा. मेरा अकाउंटिंग कैप्चरिंग कैसे होगा, अकॉर्डिंगली वहां से कैसे मेरा लायबिलिटी जनरेट होगा, टैक्स लायबिलिटी. बिकॉज मेरे को तो अकाउंट्स में दिखलाना पड़ेगा कि दिस इज माय टैक्स लायबिलिटी, सो दैट आई कैन मेक द पेमेंट. सो कैन आई कैन इंक्लूड दैट इन माय रिटर्न. मैं जब रिटर्न में भी जाऊंगा तो वहां पे भी मेरे को ये सब तो इंक्लूड करना पड़ेगा. तो फॉर रिटर्न पर्पस आल्सो आई हैव टू जनरेट अ रिपोर्ट व्हिच विल शो मी कि कितना केसेस में मैंने सिंपली एडवांस लिया है बट आई हैव नॉट इफेक्टेड अ सप्लाई, and so therefore I have not issued an invoice. So even if I have not issued an invoice because of which it is not accounted for, but when an advance is received, so that should also come in my somewhere into my sales report or let's say outward supply report. अब तो हमको sales report का concept नहीं रहेगा. अब मेरे को sales report से निकल के outward supply का concept में जाना पड़ेगा. तो टैली में या किसी में भी जब मैं अकाउंटिंग करूंगा तो वहां पे outward supply का report जनरेट करना होगा. उसमें मेरा सेल्स भी आएगा, उसमें अदर देन सेल्स इस तरह के जो सप्लाईज है वो भी आएंगे, एडवांस रिसीट्स है वो भी आएंगे. एंड सिमिलरली नेक्स्ट टाइम जब उस एडवांस के अगेंस्ट में नेक्स्ट मंथ में जब बिल होगा तो उसमें से ये एडवांस माइनस होकर बैलेंस अमाउंट ही केवल आएगा. सो दैट आई हैव टू इंश्योर इन माय अकाउंटिंग सिस्टम कि भी मेरे को केवल टू दैट एक्सटेंट ओनली एडिशनल अमाउंट ही वहां पे आए. तो दीज आर द सर्टेन थिंग्स व्हिच वी हैव टू बिल्ड इन इनटू माय सिस्टम. तो टाइम ऑफ सप्लाई फॉर गुड्स एंड सर्विसेज बोथ अ न्यू कॉन्सेप्ट. प्लेस ऑफ सप्लाई interstate, already that is also covered. कि interstate, when you are effecting an interstate supply whether goods or services, and for goods and services both the treatment is same. So when you have interstate supply the conditions are different. In IGST Act you have different conditions for how do you determine whether it is an interstate supply of goods or whether it is an interstate supply of service. So basic concept is कि where the location of the supplier and the place of supply, when these two are in different states, it will be treated as interstate. So how do you decide what is the place of supply? So suppose you are a supplier here, suppose I am a chartered accountant, I am having only one office in Calcutta and I am registered here in Bengal. So the location of supplier is naturally in Bengal. But एक case one, I have a client in Calcutta, I do their audits. और उसका फैक्ट्री भी यहीं पे है, ऑफिस भी यहीं पे है, हम उसका यहाँ पे ऑडिट कर दिए. एंड अनदर केस कुड बी आई हैव अ क्लाइंट इन दिल्ली, तो मेरा असिस्टेंट्स या मैं खुद हम लोग दिल्ली जा रहे हैं, वहाँ जाके ऑडिट करके आ रहे हैं एंड देन आई रेज अ बिल. तो मेरा जब बिल रेज कर रहे हैं तो किसके ऊपर रेज कर रहे हैं? दैट कंपनी इन दिल्ली. फर्स्ट केस कंपनी ए इन कलकत्ता, सेकंड केस कंपनी बी इन दिल्ली. तो लोकेशन ऑफ सप्लाई इन बोथ द केसेस इज सेम, बट इन द फर्स्ट केस location of a place of supply is in Calcutta. In the second case the place of supply may be in Delhi. So depending on that, in the first case CGST plus SGST will be charged, in the second case IGST will be charged, and accordingly मेरा accounting भी होगा. तो accounting में तो CGST, मान लीजिए IGST की जगह गलती से मैंने CGST plus SGST चार्ज कर दिया था, accounts तो CGST plus SGST दिखला देगा. तो I have to bring in a system, again a control, that when I raise a bill to one company, that means यहाँ पे मेरे को सबसे पहले तो ये mandatory करना पड़ेगा कि जिसके ऊपर मैं bill raise कर रहा हूँ, when I account for that bill particularly, then that company's address should also be mentioned in my system. And as soon as that address comes, when it is outside West Bengal, it must give a alert that it is an IGST transaction and not CGST plus SGST transaction. And accordingly I charge IGST, तो मेरा वहाँ पे एक चेक हो जाएगा कि IGST मैंने चार्ज किया कि CGST SGST तो चार्ज नहीं कर लिया गलती से. तो इसके लिए वो कोडिंग कैसे करेंगे एंड ऑल दैट, वो मैपिंग वगैरह वो तो सॉफ्टवेयर वाला करेगा, या अदर सॉफ्टवेयर वेंडर और क्लाइंट के बीच में वी हैव टू वर्क एज इंटरफेस. हमको उसका कोडिंग डेवलप करके देना पड़ेगा कि कहाँ पे कैसा कैसा कोडिंग होगा. बट अल्टीमेटली वी हैव टू इंश्योर दैट वो इंटरस्टेट ट्रांजैक्शन अगर है, हाउ डू आई आइडेंटिफाई, हाउ डज दैट सिस्टम आइडेंटिफाई कि इट इज एन इंटरस्टेट ट्रांजैक्शन, एंड अकॉर्डिंगली जैसे ही वो सिस्टम में उस पर्टिकुलर कंपनी का नाम डालेंगे, जो मेरा कस्टमर है उसका बिलिंग जब भी हम करेंगे तो वहाँ ऑटोमेटिकली वो IGST आ जाएगा. सो दैट अगर मैंने गलती से अगर बिल में CGST SGST चार्ज कर लिया तो दैट शुड बी reflected in my system only. कह रहे नहीं यहाँ पे it is a case of IGST. So that is one. And secondly, when I charge IGST, तो ये जो place of supply का concept है, based on that the system has to be developed, the billing pattern has to be changed, and accordingly accounting will also automatically change. Then transitional provisions, very important. Transitional provisions में we know registration process is already started, although it's not registration as of now. They are simply saying that it is an enrollment. Basically, because today you do not have a GST law, so you do not have any statutory provision for getting registration under GST. You cannot have. But they have a GST portal, GSTN is already in place, so they are asking you to enroll. Because registration is only under the statute, so present law does not provide for registration under GST, it cannot provide. So they are simply saying, just basically आप बोल सकते हैं कि एक demo transitional phase is to facilitate that the data being created, and that data whether that is created properly or not, and whether you are getting a proper interface or interaction platform or not, you are comfortable with that system or not, whether that system is working properly or not. To ensure that they have rolled out this, that okay, you enroll yourself with the system, so that you will give an user, you will get an user ID and password, and you verify the data, etc., and you are in this system, just to ensure that. So registration, then ITC, most important part will be ITC in respect of transitional stock. Transitional stock means, now first of all, any company may be presently registered under Central Excise, may be presently registered under VAT, may be presently registered under service tax, may be under any one or any combination of two or all these three, whatever it may be. Builders registered only under service tax. A manufacturer registered under Central Excise and VAT may be also under service tax. Service provider under service tax. Resellers only under VAT. Again, may be in respect of service tax also. So depending upon whether he is a manufacturer or reseller or works contractor and all that, he may have registration under VAT, Central Excise and service tax. Now, first point, if he is already registered under any of these laws, then he is filing his return. So as on 31st March, whatever return he is filing, in that whatever credit closing balance he has, input tax credit closing balance or SINVAT credit closing balance, that will be claimed as opening balance in the GST. Now suppose someone who is not registered or maybe registered only under service tax, like say in case of a builder, so he is registered only under service tax, but he may have some stock of cement, steel, RMC, various plumbing materials, electrical materials, etc. So on which he has already paid VAT plus Central Excise. So in his return he does not have any credit for that, but they will be now after GST from 1st April onwards, they will be chargeable to GST. So he should also get a credit. So for that credit, how do you claim the credit? Section 167, Section 169, they take care of it. That you determine the credit and attributable, that means you first of all determine the stock, then you see whether that stock is out of your last 1 year's purchase or more than that. If you have an older stock, no credit will be available. If it is for only last 1 year, then if you have invoices for that, and on that invoices if VAT or Central Excise is charged, you can get credit of that, you determine and you claim it. If invoices are not available, then there is an alternative mechanism which is going to be prescribed later on. So based on that, you will have to determine the credit and claim the credit. Now for claiming the credit, if you recall, many of you may be recalling that 2005 GST transition from old sales tax to VAT laws. So there also there was a concept of CA certification of stock, etc. Input transitional credit, etc. So similar concept will be brought in now. So you have to get ready for how to determine that transitional stock, transitional credit, so that those formats, etc. we can already get ready, and so that any information coming in, I just putting there, and checklist also we can prepare, and accordingly based on that, yes, यहाँ पे मेरे को ये मिला, ये नहीं मिला, and all that, and based on that whether credit will be available or not, whether it will be on actual basis. If on actual basis, then how many invoices we have, invoices का details लेके, and how do you determine the credit and certify it. Or where invoices are not available or where it is not on actual basis, then based on formula, so what is the formula prescribed, looking at that, what are the information or inputs required, compile it and just calculate and claim the credit. So those transitional credits. So what I mean to say is I have to prepare for that transitional credit. So I have to study all these transitional provisions starting from section 162 to 190 or 91 something. So around 30 sections are there. So those sections I have to read out. Of course, relating to transitional credit, it is only maybe 6 or 7 sections, 167, 68, 69 and 70. 4 or 5 sections are there. So, but all the transitional provisions I have to be careful about. I have to study very carefully, so that it's not only restricted to transitional credit, it's also relating to, let's say, I'll give you, let's say, one more example. Suppose, or there in transitional credit, you will also find some cases, like suppose they say that, let's say some stock, you have sent some raw materials to a job worker for job work. Then they say that if it was sent in last 6 months from the appointed date, that means if suppose the appointed date is 1st of April, so if it was sent after 30th of September 16, and if it is brought back within next 6 months, then it will not be treated as a supply. But suppose you have some stock with your job worker which was sent prior to that, then what happens? That means it will be treated as a supply, and if it is treated as a supply, tax may be payable. So I might have to find out some ways, or I might find out some ways to say that, अरे एक काम करो, अभी तो अगर गया हुआ है नहीं आ रहा तो उसको पहले एक बार ले आओ, you get it back, and then subsequently again resend it, so that at least I should not lose the credit. I meet that criteria. Just a broad thinking I am saying. So this way, many transitional provisions are there. Let's say suppose some disputes are going on in respect of some disputes, or let's say in some cases, like 1 or 2 people said that I am not registered, so how do I carry forward? Of course, that situation is now taken care of. So you might find similar such situations where you are getting stuck, and if you apply your mind, maybe you find some other way that okay, chalo ye is tarah se transaction kar lete hain, so that I do not lose on credit. So those are certain points. These transitional provisions are very, very important. We must study properly and find out that where I can get stuck, where I can be a loser, and if there is any way to save the client from that loss. Refund, if there is any refund due, or like one more thought is like suppose yesterday one company raised an issue that I had some SENVAT credit which was legitimate, so it was there in my books of account, it was there in my return also, but since I had no further activity, manufacturing, so I could not use it for last say 5 years or so, whatever it may be. Now what happens to that credit? So that credit is not refundable in cash. So what do I do? So maybe one thought was going, somebody said that you get registered once again. Presently you are not registered because you do not have any manufacturing activity, so you get registered once again. Nobody can stop you from getting registered, and if you get registered, you start filing your return and you bring that credit back in your return, provided it is carried forward in your books of account, in your balance sheet as a SENVAT credit receivable. So you bring it back in your return, so that that credit again becomes live, and subsequently in GST when you make a supply, you use that credit. So I am just again giving you some broad, wild thoughts that these could be certain situations or certain issues where we can apply our mind and find out some ways that okay यहाँ पे हम ये कर सकते हैं. So maybe many credits which were in dispute, which were doubtful, those credits might have to be brought back to my returns, and then probably that will make sense to carry it forward in GST. But at the same time, I also have to keep in mind that if I claim illegitimate credit, wrongful credit, that might land me to penal proceedings as well. So that also I have to keep in mind. So accordingly, I have to take some decisions. Sir.
Sir, ये जो अभी आपने बताया है, in that case, suppose sir one of the units are closed,
Right.
and the other unit is running.
Correct.
But we are filing returns for both the units as the registration has not been cancelled till date. So that trade also gets carried forward in GST.
Absolutely. In GST, you will have one single registration state-wise.
Yes.
So presently in Central Excise, in the same state, you have 2 units, 2 registrations. So credit balance in one unit, normally you cannot transfer to the other. Although courts have said that you can do that, but procedurally there is no it is not facilitated, and therefore the department normally says that you cannot. But now in GST, automatically, since you will have state-wise one single registration, so you will be filing only one return. So the entire credit of both the units, somewhere it is 0, somewhere it is some amount, both the credit you can club together and claim as opening credit. So therefore you get it. Then let's say store spares consumables. Presently in VAT, even if you have local purchases, you are not getting any input tax credit of store spares consumables. But in GST again you will get it. So transitional stock of store spares consumables, I need to again determine and find out how much is the different taxes paid, and I can claim that credit. So these are various issues in respect of transitional. These are various transitional issues on which we need to analyze. Yes.
Do we get also the input credit of purchasing packing material?
Yes. Why not? Why? That is still available even in present regime also. In VAT also it is available.
Consumables not.
Consumables presently in VAT it is not there. In GST you will get it. Identify different types of, now next step is identify different types of transactions which are taxable and which are not taxable. So first of all, before this, as I said, I need to understand supply, and I need to bring certain activities into that list. Maybe see, normally I look at the balance sheet, profit and loss account. In the profit and loss account on the credit side, what are the various incomes? I make a list of those incomes, what are the different activities from which I am getting income. Then apart from that, I need to add certain more activities which are considered as supplies under GST, presently not taxable but now taxable in GST. So finally, out of that list, I find out which is taxable and which is not taxable. Not taxable maybe because of, it may be tobacco or alcohol or electricity, etc. Not taxable because of maybe it is exempt. Not taxable maybe it is because of zero, schedule rate is 0. Not taxable maybe because of 0 rating sale supply. Not taxable maybe because of exports. So for various reasons you might have taxable plus not taxable. Then you analyze tax implications on outward supplies in present regime. That means on all these activities, presently what are the taxes you are paying, whether VAT or central excise or service tax, or both central excise plus service tax, VAT, or both service tax plus VAT and all that. And then tax implications in GST regime, that is which will be chargeable to CGST plus SGST and which will be chargeable to IGST. And non-taxable means no GST of course. And then present financials, that is your profit and loss account, that means presently how much is the profit or loss with the present taxing scenario. And how this profit or loss is going to be affected with the same numericals but the change tax structure. That means instead of central excise, it will be CGST, instead of VAT it will be SGST, instead of service tax it will be CGST plus SGST. And corresponding on the debit side, whatever central excise, VAT and service tax are paid, all are not available for set off now, but in GST all are going to be set off. So first of all, how much is the additional output on account of taxes, and then that entire tax will be available for set off. So what will be the net of taxes implication on the profit or loss? That means how your profit or loss is going to be affected. So change in finances in GST, and then checks required in the system to ensure hassle-free ITC, which we already mentioned, that various issues we need to bring in checks and balances. We need to bring in certain internal checks into the system to ensure that all my outward supplies are captured, to ensure that all my inward supplies are also considered for claiming input tax credit, and for that matter even the invoices etc. are also first ensure that first I get an invoice, then only I make an entry, because without invoice you are not going to get an input tax credit. So I need to ensure that I must have an invoice for that purchase, then only I will make an entry. And secondly, more important than that is mismatch. You might have already heard of this. ITC you have already covered.
Yes. Yes.
So in ITC there is a concept of mismatch. So mismatch means if you are claiming input tax credit of inward supplies, but it is not matching with the outward supply return of your supplier or vendor. So if there is a mismatch, subject to you are getting an opportunity to rectify and reconcile. If that is not reconciled, it is going to be added to your output tax liability in the next month. And since it will be added to your output tax liability, that means you are losing on account of your input tax credit. So in those cases, what to do? Like say one example I could give, one thought could be, presently many companies are supplying interstate at a concessional rate of CST. Concessional rate of CST is applicable, that is let's say 2% now. Instead of the applicable VAT rate which may be 5 or 14.5, you are charging 2% only against Form C.
C. Yes.
So subsequently if your customer does not give you Form C, it's disallowed and you have to pay at the applicable rate of 5 or 14.5% as the case may be. So many companies what they do is they keep some deposits from their customers, that on account of C form, जब आप C form देंगे तो हम आपका ये deposit release करेंगे. So similarly, because to ensure that you do not suffer, so similarly in here also for ITC I might have to bring in my purchase order or work order etc. a clause saying to my supplier or vendor that I will keep so much amount in deposit, or I will disburse your payment only after it matches. If there is any mismatch, I will debit to your account, or I will keep a deposit for that, whatever, depending upon what kind of customer or vendor you have. You may have 10 different vendors. For 5 vendors, you might take a decision that I need deposits. For 5 vendors who are regular and you have full confidence on them, you may not require any deposit. From some vendors, you might decide that okay, I don't need deposit, but only a condition that okay, whenever there is any mismatch, I will immediately debit your books also. And then subsequently, when you reconcile, I get my credit, so I will recredit again. So these are the certain steps which might be required in my purchase orders, etc. to ensure hassle-free credit. So purchase orders, now we need to evaluate purchase orders. That means whenever any purchase order which is already there, or subsequently when I am going to place any purchase order, I need to do a re-evaluation. Re-evaluation means what are the taxes? Like presently you might have been saying in your purchase order that it will be chargeable to VAT or central excise or service tax. Now you have to mention that it will be chargeable to CGST or SGST or IGST, whatever it may be, and how much. Like presently you might have like negotiation on it. Hey, presently you might have, suppose in case of works contract, you are engaging a contractor and the contract says that it is VAT included, service tax extra as applicable. But now in GST what happens? If that same contract continues, so service tax will not be charged and GST will be charged, but what about VAT which is already there included? So if VAT is included, how much VAT is included? Because that also you want to be reduced, to be reduced, and then only he will allow me to charge GST. But he will say that no, since VAT is included, it is not specified anywhere, so I will not reduce. Or say even if I reduce, how much to be reduced on account of VAT? Whether 2% or 5% or 8%, determination of that. So that needs to be done. Evaluate net of taxes, how much is the net of taxes value, so that on that you could load again that GST etc. whatever is happening. Then negotiation on additional benefits in the name of, let's say, or in the form of ITC accruing to the suppliers. Suppose you have a vendor, you have a contractor to whom you have given a contract for 10 crores for construction or erection of a plant etc. Now that vendor, he has given in that contract, normally you will find there is a BOQ, that how much will be material, which material etc., how much quantity and what is the value and all that, how much is the value of services and how much is the profit and all that details will be there. Now suppose one thing you can ensure that okay, instead of central excise plus VAT, now it will be GST. But he will also be getting, because if he is a vendor, suppose in Calcutta, and he is sourcing various materials from outside the state, on which he is paying CST and not getting any credit presently. But under GST on that also he will get credit. So additional benefit will flow to him. So his cost will be reduced. So on that account also you can negotiate with him. So we can help in those negotiations also, that okay, you let us find out those BOQs, etc., what is the cost sheet, etc., and remake or recalculate or redetermine the cost sheet, and finally find out or evaluate or examine or quantify that what could be the implication on account of change from the central excise VAT or service tax to GST, so that you can negotiate on that additional benefit. Similarly, taxation clause, as I said, like taxation clause has to be changed. And ITC deposit, as we already discussed. Now contracts, that is expenses, existing contracts, what is the taxation clause and quantification, and what is the new, and mismatch condition, as we already discussed. Now supply chain optimization. If you find logistics, there has to be some change. Like one example I was just giving today morning somewhere else, that suppose here in near to Calcutta there is a place called Kharagpur. Now Kharagpur is in such a location that you have one border is Jharkhand, one border is Odisha, one border is Bengal. It is in Bengal, plus you have in the vicinity Jharkhand as well as Odisha. So 3-state border. It's a junction point of 3 states, you can see. So suppose one company manufacturer in Chennai, now they may have one depot in Calcutta, that is maybe Bengal, one depot in Jharkhand, one depot in Odisha, because he transfers his goods to all these depots separately without charging any VAT or CST, and then from that depot, when they sell within the state, they charge local VAT, so that credit is passed on. But now in GST, it does not make any difference, because the supply will be now on payment of IGST to Kharagpur, and from Kharagpur again within the state CGST plus SGST, or to Jharkhand and Odisha on payment of IGST, and the entire IGST paid earlier will be available for set off. So there will be no additional cost. So therefore the company will be free to have only one single stock point instead of having 3 different stock points. So they might go for consolidation of warehouse. So in Kharagpur there is a scope that okay, instead of having small warehouses, the company might have a large warehouse there in Kharagpur, so that from there only he distributes in all these 3 states. So suppose in today's scenario, they are making or maintaining a stock of inventory, average inventory of 5 crores in Bengal, Jharkhand and Odisha. So 5 plus 5 plus 5, total 15 crores. But when now it will be only one single point, they again might make, say instead of 5, maybe 7 or 8 crores or 10 crores. So that from there all the 3 states are being fed. So the inventory level may come down. So that will lead to saving on account of cost. So logistics will be effective. Stock transfers will be minimized. No stock transfer instead of the direct sales, like maybe distributors or dealers, etc. So direct sales will increase. And since this seamless, because of this concept of seamless credit in GST design, the inventory level might come down, and therefore holding cost of inventory might go down. And lower capital, because tax at the rate of let's say 18% or 20% in GST. So to the extent of 18%, if the stock inventory level is brought down, on that straightway 20% lower investment. So lower inventory will lead to saving on account of costs. Pricing we already discussed, that evaluation of cost, net of taxes, then additional benefits of ITC, then likely cost reduction to suppliers, lower inventory cost, lower transportation cost, all these things because of. And now documentation, of course, simply for example billing, but not only billing, all the documents starting from bill, means sale bill, the purchase order, work order, stock register, challan, everything will change. So you have to now realign all your documents with GST, wherever, like say challan for sending goods or raw materials to job worker. So you have to change all these, what are the dates, etc. You have to have control over that, because there are certain specific provisions for job work, that if the goods are sent for job work, it will be treated as supply or not. It will not be treated as supply. But if it is not brought back within 6 months, then it might be treated as a supply and you might have to pay tax. So you have to keep at